conference call hosted by Investec Capital Services. As a reminder, all the participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nidhesh Jain from Investec Capital Services. Thank you, and over to you, sir.
Thank you, Via. Good afternoon, everyone. Welcome to the Q1FY25 earnings conference call of Can Fin Homes Limited. To discuss the financial performance of Can Fin Homes and to address your queries, we have with us Mr. Suresh Iyer, MD and CEO, Mr. Vikram Saha, Deputy MD, Mr. Apurav Agarwal, CFO, Mr. Prakash, General Manager, and Mr. Prashant Joshi from Can Fin Homes Limited. I would now like to hand over the call to Mr. Suresh Iyer for his opening comments. Over to you, sir.
Yes. Good afternoon. Thank you, Nidesh, and I welcome all of you to the earnings call of Can Fin for the first quarter results. Before we get into the question answers, I would just like to give a brief on the critical highlights and points on the performance of the first quarter. As you all know, this quarter was an election quarter, so April and May was a little slow for us, where we began slow and there was a little slackness in terms of the disbursement. We were quite hopeful of picking it up in the month of June. However, in spite of June being the second best month in terms of disbursement in the last 15 months, still, we could not cover up for the shortfall of April and May, so we ended up with a 6% negative in terms of disbursement. However, the fact to note or the positive we take from it is that the negative has been coming down from 9% in Q4 of last year. It has been reduced. And looking to the disbursement that we've had in the month of June, which, as I mentioned, is the second best month, and the only month we've done better than June 24 is March 24. So considering that and the way we've opened in this month of July as well, we are confident that we should be able to touch around 2,500 crore disbursement in Q2. Another small impact that we had was in terms of our Andhra Pradesh and Telangana, where post the change in the state government, there has been some impact we've had in terms of the registrations in the sub-registrar offices, which also impacted. Other than these two states, in fact, across all the other states, we've had a positive in terms of our growth compared to Q1 of last year. Coming to the second point, which is recovery. Of course, recovery has deteriorated a bit, but it is a little cyclical, as we have seen in the previous years as well, where in Q1, there is always a slight increase in terms of the gross NPA. Q1FY24, there was an increase of 31 crores, as against this in Q1FY25, the increase has been to the tune of 39 crores in Q1, which we are hopeful and confident that we should be able to bring down as the quarters pass. And by end of the year, we are still projecting and continue to hold our guidance as regards the gross NPA to come down to below 0.8%. In terms of the third point, which is the spread, we had some of the increase in spread is also because of the higher rate borrowings that we had in Q4 of last year, where the rates were slightly on the higher side. Compared to that, that has carried forward, and only at the time of the replacement we've been able to bring down by the end of the second quarter. So in about 7% of our borrowing, which is particularly the CP borrowing, we've had a benefit in terms of the repricing in this quarter, which will be impacted going forward of about 30 to 40 bps. So that is in terms of this. Second thing in terms of the borrowing cost, we have it may be noted that in FY24 as well as in Q1 of FY25, we have not raised any borrowing from NHB, which we hope to borrow once, we are hopeful that, in the budget tomorrow, we are likely to get some positive in terms of the Affordable Housing Fund. We've also had some discussions with the NHB and all. So we are quite hopeful that some announcement should come, and there we will be able to draw at that point in time lower cost funds from the NHB under the Affordable Housing Fund. But having said that, Q4 of last year we had a incremental borrowing at the end of this thing of about 7.58, which has continued in this quarter as the overall rate. And we believe that this 2.55 to 2.6 it will be the new normal in terms of the spread that we are looking at. In terms of the expenses, there has been an increase, mainly as we had witnessed in Q4 last year also, where to the extent of the IT expenses, where we have gone for an upgradation of our existing package, there the incremental cost of about 3 crores is there, 2 to 3 crores, is as compared to Q1 of last year. And also there is a 1 crore additional provision that we have made this year because of the increase in the CSR budget for this year. So this 1 crore obviously will be increased every year, every quarter, because last year we had a total CSR budget of 13.8 crores, which this year is 16 crores plus. So that additional 3.5 to 4 crores, we will be spreading out over each of the quarters. So this is the main reason for increase in the expenses. With all these 4 points, we are still confident that we continue to hold the same guidance as we had given in the beginning of the year. That is, we are confident of doing a disbursement of 10,500 crores. As we had indicated, in Q2, we are targeting 2,500 crores, which will be stepped up by 300 to 350 crores every quarter going forward. So that will help us reach the 10,500 figure, and we are quite confident about that. In terms of the GNPA, as we had indicated, this is a cyclical trend, and we are confident we should be able to we still continue to hold the guidance of 0.8 gross NPA by the end of the year. Credit cost, of course, this has been a little front-ended because of the increase in the gross NPA absolute figure. But our coverage remains the same. That is, our ECL requirement continues to be. In fact, was 49% in Q4 last year, which is now again 47% this quarter. So that as the absolute value of NPAs also will come down, and we bring it to 0.8%. We are hopeful that by the end of the year the actual cost will be around 12 bits or thereabouts only in terms of the credit cost. And in terms of ROA and ROE, we continue to hold the same guidance of about 2.1 in terms of ROA and 17% in terms of our ROE. So that, I guess, is the gist of the performance and the guidance that we have to hold for the coming quarters as well. I hope I give it back to Nidesh. Maybe we can now take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Just in terms of July, how has the disbursal trend been in July, or would it pick up after the budget? And in terms of NPLs, is there any geographic concentration where collections have been weak, or it's in general at the national level only?
Yeah, thank you, Mahrukh. See, the first point about the disbursements in July. In fact, in July itself, as I had mentioned, that July is similar to the performance in June, where we've had a good month of June. So in July also, we are the trend is looking positive. So in fact, if at all something comes in the budget and there's a further pickup, in fact that will be an additional to it. So without considering anything coming from the budget, we are targeting 2,500 crore for Q2. And second thing, as regards your collections and whether there is a geography, whether there is any particular geography is affected. Well, no. In fact, across the board, there has been a minor, increase in every cluster, every region. There has been some increase every state. So there is nothing specific to any particular state or anything. Only in terms of disbursements, as I mentioned, that our Telangana and AP disbursements have been slightly affected. And that is the only geographical, color that I can give. Otherwise, in terms of recovery, there is nothing.
Okay, but the recovery would have been affected by what in the first quarter? Because there is always a seasonality in first quarter, but it's usually not this sharp, na?
No, as I indicated in Q1 last year also, the increase was 31 crores, and this quarter also it is about 39 crores. So roughly, it is in that range, about 30 to 40 crores. Even last quarter it was there. I mean, last year first quarter, this year also first quarter it has been on similar lines.
Okay. Thanks a lot. Thank you.
Thank you. The next question is from the line of Shripal Doshi from Equirus. Please go.
Thank you for giving me the opportunity. So the question was pertaining to the sharp increase in cost of fund and the impact on the margins due to the same. So, what led to the increase in cost of fund, and how do you see it trending for the rest of the year now?
See, in terms of the cost of funds, thank you, Shripal. Coming to the cost of funds, in fact, last year itself we had a gradual increase in the cost of funds, but since it was spread out over the quarters, therefore, this did not impact. Like, for example, if I have to just share with you, we began the year with a 7.32 last year, and incrementally, if you see our second quarter last year, incremental funds that we raised in Q2 were 7.46, but because it was spread over 2 quarters, the 7.32 almost remained somewhat similar. Q3 again it went up, Q4 it went up to as high as 7.58, but again because the cost of funds, it was spread out over the 4 quarters, end of the year it was 7.40. Whereas in Q1, obviously, because the cost of funds that we raised, particularly in CP, where we are raising today, we are getting around 7.2. We were raising as high as 7.7% also. So therefore, there was also a higher cost of borrowing in Q4, which obviously will get changed or replaced only when the repricing happens or when the 90-day period gets over. So those about 6 to 7% of our borrowing that comes from our CP, we have already repriced at around 7.2 and thereabouts. So this is mainly the main reason why it has happened. Last year it got evened out over the period, but 7.58 is what it is. Maybe going forward, as I said, we have repriced the CP, so in Q2 we'll get the benefit of the 30-40 bits for the CP component, which is about 7% of our borrowing. So effectively about 1 to 2 or 2 bits or something further can improve going forward. Second, as I mentioned, we had in the beginning itself, we did not raise any NHB funds last year. Therefore, the borrowing was mainly from NCD and banks, where the rates were slightly higher. If we had raised an NHB fund, it would have probably come down and we would have got the benefit of the lower cost this year. But having said that, we are hopeful that something will come up and which will allow in the budget, and we are hopeful we'll be able to raise something quickly in this quarter also. So that will again further help us bring down the cost. So right now, this is what we expect in terms of our borrowing cost.
So just 1 bit on the NHB front. So why did we not go for that raising funds to NHB? Like, were we exhausted with our limits, or what was the reason? And just one follow up there. You said that you are expecting in the budget on something on the affordable housing fund side. So some color if you could give here on this fund.
Sure. See, if you see our presentation, we have put one slide on our CLSS scope, and also in that we have mentioned that throughout the last 6 years, we raised about 3,783 crores under the Affordable Housing Fund. Under the Affordable Housing Fund, the NHB gives refinance at a very low rate for lending to some specific affordable housing segments, and we are allowed to price around 3.5 to 4% above the rate at which they lend to us. Now, this particular fund comes through budgetary allocation from the government, and last year the budgetary allocation was very low, because of which normally the NHB would give us a ratio of 50-50. So 50% we could raise under the AHF, which would be coming at around 4.5% earlier, and we could also raise the review, and the remaining 50% would be a refinance from the NHB, which would be at a normal rate, which would be around 8.25 and thereabouts. So So effectively, we would have got a rate benefit of about 6.5%, which is the NHB funding throughout. But last year, the budgetary allocation which the NHB got under the AHF was not there. So therefore, the NHB was, although we got a refinance sanction of 1,500 crores from NHB, we chose not to pick up that funds because there was no component of AHF in it. Or in fact, there was a very, very small component. Instead of 50-50, it was 10-90 or max. If we would have negotiated, they would have made it 20-80. So because of that, the blended cost for the refinance last year, if we had raised, would have still been higher than the rate at which we are raising from banks or from CP and all. So therefore, we chose not to pick up those funds, and we let the refinance lie. So we have a refinance of 1,500 crores which we got sanctioned last year, but we did not pick it up. So that was the main thing. And now this year, if we get the refinance, the AHF is again NHB. Again, we'll get the cheap funds which will help us give a blended cost which will be lower than our other borrowing avenues. So that is when we will pick up the funds and we will utilize the sanction that we have. So that is the thing. Now coming to your second portion about the budget, we've had some discussions with the NHB and all. I guess it's also been mentioned in the various press articles that there is a likelihood of a AHF fund again being reintroduced so that housing finance companies can get cheaper funds. So that allocation is something we can expect tomorrow, or we are hopeful that will come tomorrow, some announcement. And if all the discussions that have been conducted, if they are fruitful, then we will get something in the coming budget where we can expect to get some cheaper funds. And once that comes, as I said, we will be drawing this sanction that we have of 1,500 crores.
Got it, sir. Thank you so much, sir, for that detailed answer. I'll come in the queue if I have more questions, and good luck for the next quarter.
Thank you, Shripa.
Thank you. The next question is from the line of Mr. Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, hi, good afternoon. Thank you for the opportunity. Sir, my question is on growth and our guidance. So when I look at the annual report also, which was published in July, it is mentioning about reaching 41,000 crore loan book by March 25. And that is about 16-17% growth on last year's March base. And with this disbursement target of 10,500 crore, can we reach this number, or this is more of an aspirational number?
Good afternoon, Rajiv. We have targeted 10,500 crores, and if you see our slide where we have given the movement of our book, on an average in a quarter, we are getting somewhere in the range of about 1,250, somewhat kind of a repayment plus prepayment, everything put together. So going by that, we are expecting somewhere in the range of about 5,000 crores will come by way of a prepayment and repayment. So if we do about 10,500 crores, the net addition to the book will be about 5,500 crores, which will be just about a little less than 41,000. So yes, to some extent, about 200-300 crores or something, we can say is what we would want to push. But otherwise, if we are with the 10,500 crores, we should get a net book of somewhere around 5,500 crores.
Okay.
We were at 35,000 crore by March 24. So another 5,500 crores would be around 40,500 crores.
Got it. And sir, I also see that the portfolio yield has improved by 5 basis points on sequential basis. So I believe that the incremental disbursement yield is lower than the portfolio yield. So something has repriced in the back book. So what is this repricing happening, and can such repricing benefit still continue on the back book in the coming quarters?
No, it is not that way. Incremental book, what is happening is the incremental disbursements when we are doing, we are also having loans you would see that our growth has mainly been in the 20 to 30 and 30 lakh plus segment, where our pricing is also a little on the finer side. So incremental less than the overall book of on the overall portfolio. So that is one thing which is there, which we will be offsetting obviously with some push in the LAP book, where we only have about 5%. So that is where we are looking at offsetting that slightly, and also with a little more increase in terms of our lending to the SEMP segment, where again we are charging about 0.5% higher compared to the salaried segment. So these are the two things which will slightly offset the lower yield in the overall book. And obviously, if the affordable housing thing comes, and then obviously our below 20 lakh segment will also pick up, where also the rates are slightly higher compared to what we are offering to the 30 lakh plus segment. So that is the major thing. There is no repricing as such left, and otherwise we have moved to a quarterly reset strategy, where as in every quarter we will be repricing the loans for every customer.
Okay, just one last thing. How much of our bank loans are linked to repo and EBLR?
Sure, yeah. So it's approximately 40%, and the short-term facilities are linked to TP.
Sorry, Apurav, your voice was a bit low. Can you please repeat?
So around 40% broadly.
Okay, to repo?
Our borrowing is linked to the MCLR base.
MCLR.
Okay. Okay. Thank you so much and best of luck.
Thank you. The next question is from the line of Aditi Loharuka from CD Research. Please go ahead.
Aditi, we are not able to hear you.
Am I audible?
Yeah, now you're audible. Please go ahead.
Okay. So my question is that why is the company struggling to grow its loan book for salary class despite its inherent advantages associated with it?
See, Aditi, last year we had focused more on internal controls. We had a lot of process changes and all. So our disbursement rates have actually been slightly in the whole of last year. I mean, barring the Q1, we've had a negative growth, which you can see from our presentation slide 20. That Q2 was negative, Q3 was also negative. But as we are moving forward, this negative has been reducing. And one of the reasons why our growth has slightly gone down from the previous rates of about 15 to 17% is because of our lower disbursements. And that is where we are now pushing for disbursements, because now all the efforts that we have put for last year in terms of internal controls and all the steps that we have taken have kind of ended, and we have all the processes have stabilized. So going forward, we are purely focusing on the business, and this year our target is for 10,500 crore, in which case our growth will end up at around 15% on the AUM compared to FY24.
Okay, so in particular for salary class also you are aiming for 15%.
Sorry, can you be a little louder, please?
In particular for salary class also you are aiming for 15% growth.
Our salary segment is around 73% of our book is to the salary segment, and we, as I mentioned earlier, we are looking at a slightly higher business in the self-employed segment. But having said that, also we probably would be still around 70% plus by the end of this year in salaried segment. And there also we are not facing any issues. For the last few years, we have been able to manage this 70% plus salaried segment focus. So that way we don't see much of a challenge in that segment, because there also we have had quite a stable growth even in the salaried segment.
So but the growth is around 8% from FY23 to FY24. We see the growth is around 9%, and in the last quarter also year-on-year growth is around 8%. So can you just give us some guidance on that?
Yeah, so as I had earlier also mentioned, because of a muted last year where we had a negative growth in disbursements, the overall growth in the AUM, which normally lags by little as we progress, has been coming down now. And with growth, which we are expecting to pick up, because now June has been a good month. July also the beginning has been quite good, and all the changes that we impacted last year have stabilized. So this year we expect to have a very, very strong performance in terms of disbursements. We are projecting 10,500 crore disbursements in this year. Q2 we are targeting 2,500, and then 350 crore plus additional every quarter thereafter. So with that kind of a growth, we should end around 10,500 crore, which will result in about 5,500 crore or thereabouts addition to our loan book, which will be about 15% growth. AUM growth.
What measures are we taking to increase the disbursement?
See, in terms of the disbursement, we have last year we had started with a separate marketing team, our sales team, from within our staff strength. We have carved out a separate sales team that is actually going to be focusing on direct sourcing. We already have a DSA sourcing, but that DSA sourcing was a very high percentage, so about 80%. So along with that, we want to strengthen a second channel, which is a direct marketing or direct sourcing channel. So that is something which we have also implemented, and now we are strengthening that team. Therefore, that is something which will add to our business. We have also started last year, digital marketing, which now this quarter we have this. The same thing will be following up with the leads that we are getting. Our, the initial leads and all tie-ups that we are beginning to do is also helping us. Last year we had started on a small basis the APF marketing also. Though last year we did not get much of a success in that, but this year we have started the same marketing team is also doing a lot of APF project sourcing. So these are some of the steps that we have taken in terms of pushing the disbursement growth. And second, another major thing is also that we had the process changes that disbursements were centralized and reconciliation was centralized. So all those things have stabilized. So now the branches are very confident in able to face the customer and give a proper commitment in terms of the handover of the disbursement and everything. And we have also moved from a 2-tier structure to a 3-tier structure. So we have introduced a zonal layer of a zonal offices. So the zonal offices are handling about maybe 1 or 2, 3 states that way, depending on the geography and the number of branches. So that layer is also adding an extra support in terms of the disbursement, in terms of the sanctioning power, because in the zonal offices we have now positioned the senior people who have a higher sanctioning authority. So that way, that has been one of the major reasons why we have been able to push a little bit on disbursements and the inquiries, because we are able to have a sanction higher amount from the local branches itself.
Okay,
I hope it answers your query. Thanks.
Yes, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Manant Tijoriwala from ICICI Prudential AMC. Please go ahead.
Hi sir, I have 2 questions. One was, do we expect some CLSS kind of scheme as we had earlier? Because I think you mentioned the Affordable Housing Fund. So you think the budget expectation will be restricted to that? And does the disbursement expectation also get revised if some scheme comes up, either Affordable Housing Fund or the CLSS?
See, CLSS is definitely also possible. We did have a discussion, quite some time back on the CLSS also with the regulator as well as with the ministry. But the recent discussion subsequent to that was on the AHF. So in fact, both the discussions and both the, on both aspects, there has been quite a bit of discussion with the ministry and with the regulator. And come to think of it, if the government, if you look at the way the government is looking at it, they announced 3 crore houses to be constructed during the year, 2 crore for rural and 1 crore in the urban. So that will bring in the supply. The second thing would be the AHF, which we had a recent discussion. So if that comes, that would provide the funds to the lending institutions for onward lending to the customers. So that both things being done, it is quite logical that the government will also come with the CLSS so that there is a demand also, spur in the demand also. So that would take care of the supply, the demand, as well as the funding availability. So I guess, logically speaking, yes, both are possible. The CLSS as well as the AHF. The CLSS was a slightly dated conversation which we had with the regulator. The AHF is a more recent conversation that we had with the regulators. Now, having said that, our present position of 10,500 crore is on a regular basis without considering anything, either the AHF or the CLSS. The AHF, obviously, if it comes, will only help us in terms of our funding costs. But the CLSS will definitely give us a push in terms of the business. And if that comes, yes, there is a possibility we can do better than 10,500 crores also.
Understood, sir. Fair enough. Sir, I just had a technical question on the standard provisioning. I saw that it has gone up quarter on quarter. So, and on the restructured assets, do we expect any more slippages? And what was the number of restructured assets? It was, I think, 520 crore at the end of March.
See, in terms of the restructured book, we had originally 670 crore, but now that figure has come down to about 5,081 loan accounts, and I'll just give you the number. So in terms of that itself, there is no specific trend or anything that we see in terms of the any further pain in the restructured book. It is just behaving just like our normal book is there. So I think, restructured book is not any reason for this. It's a normal cyclical reason only for the slight increase in the NPA. Presently our portfolio is around total NPA in our restructured book, which is about 106 crores, is about 18% of our book. So I guess reverse calculation. So we have about 580 crore of restructured portfolio is still in our books, approximately. And 106, which is about 18%, is the NPA in that.
Correct. Got it. And any reasoning for the standard provisioning to go up?
No, I think, if you look at the coverage, it was 49%, now it is 47%. So I said there is no, it's mainly, if you look at the percentage, it is remaining the same.
No, I'm asking on the standard provisioning, not the NPA provisioning, that we saw, that I could make out the coverage. But I think on the standard provisioning, the number is gone up.
Nothing major. I don't think there is anything major. Maybe it is just a calculation. You're talking about this one, this 172 crore, which is as per the ECL model. It is purely based on the ECL model, so there is no any special thing that we would like to. Nothing special about it.
Okay, got it. Those are my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Shweta from Elara. Please go ahead.
Shweta, we are not able to hear you.
Ms. Shweta, your line has been unmuted. Please go ahead with your question.
Sir, am I audible now?
Yes, you are audible. Please go ahead.
Yeah. So, given that we are expecting positive announcements on the budget front, and considering our ticket sizes have gone up about 20 lakhs, so what percentage of our portfolio on the asset side will be positively impacted?
See, if you look at our, AUM, today we have about, 47% of our portfolio today is in terms of, is below 20 lakhs. And in terms of incremental disbursement, close to 40% of our incremental disbursements last year were in the below 20 lakh segment. And if you also see our slide on CLSS, the portfolio where the CLSS was offered, the average ticket size is about 16.33 lakhs. So in fact, it is this 40% of the book where the average ticket size is below, where the ticket size is below 20 lakhs. I think that 40% of the book incremental portfolio is where we would expect to get a advantage. But having said that, we are also looking at opening branches this year. We have a target of 15 branches this year, and we plan to open all these 15 branches in the tier 2 towns. So those tier 2 towns obviously will also have a ticket size below 20 or 25 lakhs. So there, that will also going forward will help us in terms of our CLSS benefits that we can pass on to the customers.
Noted, sir. So secondly, you alluded to the fact that incrementally our focus in the recent periods have been on self-employed customer category, as well as we've been pushing LAP. Now, this is by design or demand, because where I'm coming from is, are we seeing competitive intensities flaring up in our home turf markets and in the home loan space, which is wanting us to slightly change our portfolio mix? Although Y-on-Y basis, we have not seen significant change, but going forward, any change in AUM and portfolio mix because of competitive intensity? Thank you.
Yeah, sure. See, Shweta, basically it is not by, because of any competitive intensity or anything. Of course, LAP has always been a portfolio where demand has been high, but we consciously had not offered LAP as a product for our customers. Whatever minimum limited 5% business that we have under LAP was only to existing customers in the past. So basically what we have done is we have only slightly offered it as a separate dedicated product to our customers. That is why we are saying that this LAP might slightly go up from about 5% to about 7% in a year or so. The second, as regards the self-employed segment, see, the demand today is obviously increasing in that segment because based on our appraisal standards, we have been giving self-employed. We don't have a self-employed product for appraised income or for surrogate income categories. Okay, so obviously that was limiting our scope of funding to this segment. But going forward, with GST, with all those UPI payments and everything, the segment of self-employed which is filing returns and which is falling within our eligibility norms has also been increasing. So that is why slightly our self-employed segment has also been going up. And to be very frank, we still don't do products which are under appraised income or surrogate income categories. But now the government is also targeting a dedicated product based on the UPI collections or the collections received under through these online channels and all, and also GST. So there is a possibility we may also look at a separate product for this particular segment, because there is also a push from the government and a more acceptability in terms of the refinance and everything. So that is something we could happen. But as of now, it's more because of the of a conscious call within, rather than because of any competitive pressures.
Noted, sir. So I just squeeze in one more question related to your second point. So you have been guiding 30 billion odd disbursements for Q2, and Q1 we clocked 19 billion odd disbursements. So I understand you have been mentioning this even in your opening remarks, but is it that Q2 is going to be much stronger this year than past 2 years, that we are seeing this sharp jump in from 19 to 30 billion? Because you mentioned June was very good, much better than March, and July has been picking up well. So this 19 to 30 billion sort of strong traction, what would you allude this to?
No, I mentioned 2,500 crores. That is not, so that is not 3,000 crores. 2,500 crore in Q2. And going forward, it will be around 2,800, 2,900 in Q3, and 3,200 or roundabout thereabout, or 3,300 in Q4. That is how we plan to achieve our 10,500 crore numbers, and not 3,000 crores. So at least in Q2, we are from 1,850, we are moving to 2,500. And as I said, that this 1,850 also is a little subdued because for April and May month, whereas our June definitely gives us the confidence that the 800 crore monthly run rate is definitely possible, looking at what happened in what was the number in June and what we are looking at for July as well.
Noted, sir. That's very helpful. Best of luck. Thank you.
Thank you. Thank you, Shweta.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Suresh, can you please reiterate your growth guidance for this current year, and also can you comment on what would be the steady state spreads from here on?
Sorry, can you repeat the second question, please?
Spreads and NIMs in the steady state. What do you expect? Where do you expect them to settle down?
Yeah. See, in terms of the growth guidance, we continue to have the same growth guidance for this year, that we are targeting 10,500 crore disbursements, which will give us a net addition around 5,500 crore to the book. So around 40,000 to between 40,000 and 41,000 crore is what we are targeting as the end portfolio number, which will give us about a 15% AUM growth. In terms of the spread, we had given a guidance of 2.5 plus, and we continue to hold that even now, although our present number is 2.54, and we are maybe 2-3 bits can further go up from here without the NHB refinance. And with the NHB refinance, it could further bring down our borrowing cost. But having said that, our guidance will still be 2.5 spread and 3.5 NIM.
Okay. And can you also just give us an idea of why were the GNPA is higher this particular quarter? Was there any specific reason in the system, or what led to, because we are seeing across the board so minor increases, so what has been the cause of this?
See, as I have mentioned earlier also, there is no particular reason, any particular geography or any particular, trigger for this. It's more of a cyclical thing where post March, pressure and all the, the recovery focus that we bring in, post that you have to give a, little breather to the customers, and therefore this is a bit of a cyclical trend that in Q1 it goes up. Q1FY24 it went up by about 31 crores, and this quarter it has gone up by about 39 crores. And it is spread across all the geographies. There is no specific trend to it. A little bit here, a little bit there has gone up across. And but one thing is that none of the cases are the cases where there is any stress in terms of the customers or anything wherein there is some reason for any default. It is more of an intensified efforts in terms of recovery will definitely bring down like it has normally happens in Q2 onwards.
Okay. And can you just give us the NHB incremental borrowing number that you wish to do in FY25? And how much?
I can share what are the rates at which we are borrowing currently.
Okay. What is the rate?
Bank borrowings are long-term term loans and all. We are getting at 7.95, and a recent one we have just got a sanction at 8%. This is in terms of our 10-year long-term bank borrowings that we are raising. In terms of the CP, we are now getting at around 7.2 to 7.25. And in terms of NCD, the last we raised was in the month of March, end of March, which we actually picked up on 3rd of April. That was around 8.18%, 900 crores. So since then in Q1, we have not raised any NCD, we have not raised any NHB refinance, but traditionally NHB refinance, if the AHF comes, we expect the funds to come at around 6.75%. But that's of course subject to the approval and everything, so I wouldn't want to comment on this thing. Right now, bank borrowing 7.95 to 8%. Banks are also been giving us short-term lines of credit, very short-term, which is would be in the range of around 7.4 to 7.5.
Okay. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Vijay Singh Gaur from Sharekhan. Please go ahead.
Hello.
Yeah, good afternoon. Can you be a little louder, please?
Yeah, hi. Good afternoon, sir. Vijay here from Sharekhan. Just could you give me some light on...
Mr. Vijay, may I request you to use a handset, please?
One minute. Hello.
Yeah, much better. Please go ahead.
Yeah. Hi. Good afternoon, sir. Just could you give us some light on credit cost?
Yeah. Good afternoon, Vijay. See, right now, since this is a one-time spurt, and we believe that the NPAs will not go up further from here. So we continue. So the major portion of the provisioning that has happened has been already front-ended. So we still believe that around 35 crores or thereabouts will be the final, or roughly thereabouts will be the final provisioning for the entire year if the NPAs go down. So having said that, our credit cost will be in the range of about 12 basis.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Mohit Jain from Tara Capital. Please go ahead.
Hello.
Mr.
Yeah,
Mohit, please go ahead.
Yeah. Hi. Good evening, sir. So thanks for the call. So I got disconnected at the time when you were discussing about this scheme. So I just wanted to have you in, sir. If my understanding is correct, in case of CLSS, the end consumer gets the loan at a very lower rate, and we get the interest subsidy from the government. How is this affordable home scheme is going to work? Are we going to get the same kind of a differential, or how is it going to be different from CLSS?
No. CLSS is different. See, in case of CLSS, like I mentioned, our portfolio, we've done about 6,000 odd crores of this thing funding we have done under CLSS. And against that, we've got a total CLSS subsidy claim of about 975 crores. Okay, so what happens is, in case of CLSS, we give loans to our customers like a normal eligibility, like a normal loan we give to our customers. There is no difference in terms of the rate of interest or the product or anything. If the customer qualifies under the criteria for CLSS, that is namely in terms of the first-time homeowner, separate family unit, typical size of the unit size, the family income benchmark and all those things. If all those criteria are complied, then we have to submit a claim to the nodal agency, which in our case will be NHB, and from there to the government the subsidy is released. Now suppose as per our calculation, the average ticket size of the CLSS was of the loan given to a CLSS customer was 16.33 lakhs, and the average was 2.41 lakhs was the average subsidy. So if we have given a 16.33 lakhs loan to the customer, then when the subsidy of 2.41 comes, then we have to directly credit to the customer's principal, and the principal of the loan comes down. So 16.33 will come down by 2.41 lakhs, and it will be somewhere in the range of about 12 point something lakhs. Okay, so the customer's rate of interest will remain the same. Customers, everything will remain the same, except that the loan will come down, and the immediate benefit will have to be that the EMI of the customer will have to come down. So say for example, a customer's income was 40,000, we have given him a 16.33 lakh loan, and his EMI was coming to say 17,000 rupees. The moment this 2.41 is credited, his EMI will come down from 17,000 to around 14,800 or something. That is how it works. Okay, so in terms of the CLSS, there is no interest rate benefit that we get, except only the customer gets the benefit in terms of the subsidy, which is translated in terms of a lower EMI and a lower loan outstanding. Okay, whereas the AHF is a little different. AHF is a funding which is given to the lending institutions at a lower rate of interest for onward lending to customers. So under the AHF, earlier we used to get at a rate of 4.5% or 5% from the government, from the NHB, and it was coupled with 50% AHF and 50% regular refinance, so our blended cost used to be around 6.75 or 6.5 actually. Whereas now the last discussion that we had, the government will pass on some budgetary allocation to the National Housing Bank for onward lending to institutions like us, where we will borrow at 6.75 and we can lend up to a rate of 11.25 with a spread of 4.5%. Earlier this spread cap was 4%, and now the spread cap has been proposed to be increased to 4.5 as per the discussion that we had. So what it does is it gives us first of all it's an additional avenue for raising funding, and two, it is a lower cost fund for us, which is lower than the rate at which we normally borrow from the other institutions. So these are the benefits in terms of the AHF. They are completely two different products. The CLSS for demand, the AHF provides funding to the lending institutions. One is for demand, the other is for providing the funds.
Understood. And so any rough idea you have regarding the size which the government can allocate for this NHF?
No, anything on that, but we are hopeful that we are praying that it will be a good handsome amount. That's it.
Okay.
Anything beyond that, but it looks from the government side that the government is very very keen to push the affordable housing. So we are hopeful that it should be some positive number.
Okay. And just finally to conclude, so you believe it's likely that the push from the AHF side is going to be higher as compared to the CLSS push, or it's going to be a combination of the two? Which one is more likely?
It's going to be a combination of both. And as I said, for the demand, for the supply, the government has done something. So from the demand is the second, and the third is the availability of funds. So the CLSS and AHF can provide that gap in terms of the the spur on demand and the availability of funds. So if both come, that will be an absolute cracker of decision.
Understood. Okay, thanks a lot. Thank you for the explanation.
Thank you very much. The next question is from the line of Gaurav Jani from Prabhudas Lilladher. Please go ahead.
Thank you for taking my question. Sir, hopping a bit on the CLSS, right? So I assume last year the disbursements were zero, right? Because the scheme was not continued. So we see it as 1901 for FY23, but it was zero, right, for 24?
Sorry, you are a little muffled. Can you be a little clearer, please?
Yeah, I'll just switch to the handset system. So what I was asking you is last year the CLSS, FY23, the CLSS disbursements are mentioned as 1901 in the PPT. Last year it would be zero, right? Because the scheme was not continued.
No, it is in FY22-23. We have not given last year because last year you are right. There was no. If you see the graph, the year is 22-23.
Correct. So because last year would be zero, right? That's just want to clarify that.
Zero because the scheme itself was not there.
Understood. And hence, sir, on a stock basis, right? So what will be the CLSS AUM, CLSS linked AUM?
CLSS, we have about 40,000 customers. I will have to check what is the outstanding balance because some of the loans would have got closed and closing, repayments also. And the figure that we have given is 6572 is
that's sanctioned. So it will be lower than that, right?
It will be much lower because 974 was straight reduced from that the moment we got the credit and passed it on to the customer. But over and above the 974 also there would be some prepayment. So I guess probably it would be not more than about 5,000 crores. But I'll still come back to you with the correct figure because it's just an offhand return. I'll come back to you, Gaurav.
Okay, sure. And sir, just to clarify, how do you define affordable is basically ticket size below 20 lakhs, right?
No, actually, there were multiple criteria for defining our eligibility under CLSS. One was the income segment was one, wherein for EWS it was a different segment. For LIG, the income was up to 6 lakh annual family income was up to 6 lakh was the LIG. MIG, there were MIG 1 and MIG 2, which was 6 to 12 was MIG 1 and 12 to 18 was MIG 2. So one of the criteria is family income. The second criteria was the size of the unit, which was 60 square meters. The third criteria was it was only for urban cities. So initially about 4041 towns were identified. Subsequently, it was increased to around 17,000 towns totally. And the fourth criteria, of course, it has to be the first dwelling unit of the family. So these were, I think, some of the criteria. I might have missed one or two. So these are the broad criteria. This year, therefore, if you look at it, roughly it comes to 25 lakhs in other areas, and metros it was 35 lakhs. That was also the limit in terms of the loan amount. So this year also we expect that probably the limit will remain the same of 25 lakhs.
Okay, and sir, this 25 and 35 will be standard across companies or will it differ?
No, it is across companies, but it is linked to the city. So if it is a metro, then the ticket size can be up to 35 lakhs. If it is other than metro, it is 25 lakhs.
Sure. Understood. This helps. Just last question, sir. Just to clarify, full year basis, we did about a 3.6% margin in FY24. Assuming you said that spreads would sort of be stable from here. So, safe to assume on average basis, we are looking at 3.5% for 25, sorry.
You're talking about NIM, right? NIM of 3.5, yes, and spread of 2.5. Our spread last year was 2.6 is ending, and this quarter it is 2.54. But our guidance was 2.5 plus, and we continue to hold the same 2.5% spread for the year and 3.5% NIM for the year.
Okay. Understood. Thank you so much, sir. I'll come back.
Yeah. Thank you.
Thank you. The next question is from the line of Anusha Raheja from Dalal and Broacha. Please go ahead.
Yeah, thanks for taking my question. So on the affordable loans, what is our share as a percentage of total outstanding loans?
Our outstanding portfolio, we have, as I mentioned earlier, we have about 47% of our outstanding portfolio is in the ticket size of below 20 lakhs. I don't have the breakup of 20 to 25. I'm giving you up to 20 lakhs. About 47% of our outstanding book. And incrementally, last year we did about 39% of our incremental disbursements were in the this thing. Sorry, I stand corrected. 34% of the incremental disbursements were in the below 20 lakh segment. I stand corrected. I'm sorry. And the outstanding portfolio is 45% of the outstanding book is in the below 20 lakh segment, and 34% in terms of the incremental disbursements is in the below 20 lakh segment.
Okay. And sir, in terms of spread?
In terms of spread? Hello? Anusha, we lost you. Can you please repeat the question?
Anusha, please unmute your line.
And sir, in terms of the spreads, we had 2.67% in FY24, and you're talking about 2.5% for FY25, right? So you said that you will be having higher NHB drawdowns in this fiscal. So despite that, we will see spreads falling down by around 10 to 20 basis points. So what will cause the fall?
No, I am not saying that our spread will come down. In fact, last year also our guidance was 2.5, but our endeavor obviously is to, turn our portfolio, our borrowings, and also avail the best possible rates. So our endeavor is always to keep it at a better than guided kind of spread as well as in NIM. However, as a conservative thing, we have mentioned that it will be 2.5, but obviously we expect it to be a little better than that. Even as we speak in Q1, it is 2.54, and we have already repriced some of our commercial paper and everything in the month of June, where we expect to get a benefit of about 30 to 40 bips on that portfolio of about 2,200 crores of CPs. So 2.5 is a conservative guidance, which we definitely will achieve. But our endeavor will be to do better than that. I'm not saying it will come down to 2.5.
And lastly, sir, on this housing fund that which we're anticipating tomorrow in the budget, so that will be only for the affordable or for other housing loans as well?
This is kind of keen to push only affordable housing. So I guess in terms of the shortage also, the shortage of housing is mostly in the segment of EWS and LIG only. So therefore, I expect that the government will probably announce only for the affordable segment.
Okay. Okay. Thank you, sir.
Thank you.
The next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, Suresh. Good afternoon. Thanks for taking the question. Two questions. The first one is on our sourcing. If I do a reverse calculation of our expected disbursement, which is roughly around 2,500 crores in second quarter, with the average ticket size, we're doing close to 10,000 loan account disbursements in a quarter, of which roughly around 80% or 8,000 is from the active DSA base. So again, when I do it on a per month basis, one DSA is doing close to 2 loans per month. And as per our discussions, I think there is one marketing guy in almost every branch. So ballpark, each guy would do, each internal employee is doing close to 3 loans per month. So this boils down to maybe 0.5 or maybe 1 loan per week. Also, is there a scope to increase this